Ladies and gentlemen, boys and girls, I am talking about the veterans of the United States of America. And here at the Code, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has made that sacrifice, and the least we can do is honor it every single morning. So veterans, the families, everybody involved, for real, from the bottom of our hearts, man, God bless you and thank you for your service. We love and appreciate you, and big shout out to anybody else out there helping out their local communities, all the doctors, nurses, teachers, firefighters, the public servants, the janitors, the coaches, anybody helping out and giving back, man. Way to keep your community going. That's what I'm talking about. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Oh, it's game time, baby. Or not. Yeah. A lot of candles here. Oh my man, so got a little bit of time here. Okay. It's on next. I want to tell and start the I wonder if they will be great. So happy Friday. I hope you like the video, man. I hope you liked it. I hope you loved it. I hope you're ready to go. Let's have a good morning, but be prepared, okay? Be prepared. Every day has been wild. I was prepared. I told you it was going to be wild. We got a free market beach. Ladies and gentlemen, boys and girls, Bradley Crystal and the beach. For I said Friday. So Friday has fun.
In today's video, I'm going to break down exactly how to find the tops and the bottoms while day trading in the stock market. I'm going to give you my personal strategy, how we caught the exact top in real time and before it happened today in our live trading community, and all the other tips and tricks that I've used to make millions over the years trading and things I wish I would have known from the get-go. Now, I keep my trading very simple. I don't use indicators, I don't use algorithms, I use two words: price, action. This allows me to read price, read volume, and tell exactly where stocks are going before they go. They try to sell you indicator bundles that will make you rich quick and make trading easy. No, that is not how it works. So in today's video, I'm going to break down exactly how I use price action, how I used it today to help our Team Bull community, and how using these simple strategies has helped me change my trading and change my life for the better. Now, when it comes to finding A+ entries, there's a few things that you need to know. For example, when the team and I entered puts at 426.5 this morning, that wasn't by accident. There's a process that I follow. There's several confirmations that I need to see that I'm going to break down throughout this video. So whenever you are day trading, the first thing that you need to do is look at the overall trend. Now, I start my day out every day with two different charts. I only trade SPY, so the first thing that I do is I pull up my SPY daily chart. After that, I type in SPY, and I pull up my SPY hourly chart. These are my two bread and butter time frames that I get my levels from, that I get my levels on Instagram Live every single morning from, and where I have made millions of dollars trading from. Now, how do you utilize these? The first thing, such as this morning, that I like to do is look for any solid supply and demand areas. I look for key areas of confluence. Where has the daily chart touched multiple times? Where has the hourly chart touched multiple times? Where do we have multiple candle closes and opens on the hourly chart? So that's the first thing that I saw this morning. When I was telling the team that I liked that 426 to 427 or 426.7 reject, that came from the hourly chart. We saw these candle touches up here on the hourly, and we saw this candle touch up here, right? The swing high. So between these two areas of confluence, that created our new supply zone. So we go further. After we identify that, we go to our 5-minute chart. We'll notice here that when you identify the overall trend, that's our first step, you then want to look at what's happening pre-market. Are we gapping up? Are we gapping down? And what is that sentiment in comparison to what we've been seeing in the overall market? Today we gapped down. We gapped below those levels. So to me, I look at that, and that is an immediate support turn resistance. We're going to look for puts on pops. So that's step 2. We identify where that puts on pop spot is going to be. We follow the trend. I'm not trying to be a hero and trying to find tops and bottoms. So to me, in my experience, that's a puts on pops play. Our support and resistance, and now it's our job to find where that reject is going to be. So for me, I look for my risk reward. That's the third step, because we're not looking for areas where we can just make money. I don't want you looking for trades that you can make money. And I know a lot of you guys are going to be like, well, J-Dub, that doesn't make any sense. Well, actually, it really does. I want you guys looking for spots where your risk is managed. Start thinking in a risk management perspective. We protect the downside, the upside will come. So for me, I see this. I'm telling Team Bull live on voice, live in text, that I think that if we go between 426 to 426.5, preferably up to 426.7, that we have solid risk management, because we will stop this trade if we break above and hold above 427. We have identified a 30 to 50% risk here for a potential $1, $2, $3 move down. And that is how I want you guys thinking about your trading. That is the perspective that I want you guys adapting to your trading. I want you looking at things from a risk management perspective. Okay, we can read this price action. We can read these levels. We can dial in our exact strategies, but without risk management, guys, we are nothing. We will not be able to move forward in our trading and keep our money without risk management. So when I am reading price action, guys, I am first and foremost looking for my levels. Second, I'm looking for the trend. And then third, I'm going to look for where I can define risk, to where my risk reward plays out and gives me an upper hand in the long term. I could have lost this trade 2-3 times, and on that third or fourth time winning it, my R multiple would have crushed all those losses. That's the key, is you're going to have losses in trading. Number 4, our job is to be the best loser. I need you guys to be the best loser possible. Now, I'm not saying try to keep losing. That's not what I'm saying. What I'm saying is that I want you guys becoming so good at losing, so good at managing your risk, and so good at keeping those losers small that when you win, your winners outweigh those losers and you keep more money. Losing is always going to be a part of the game, right? Obviously, we trade live at T-Bull. We have lots of education. This YouTube is full of education, but you're still going to take losses. I'm going to take losses, and that is okay. It's part of the game. Losses are part of the game. Take advantage of the market tuition. So for me, I look at my levels, I look at the trend, I define my risk, and I look for setups, the 5-minute and the 2-minute chart. After finding my bigger time frame levels, and I execute on those smaller time frames. That, my friends, is my quote-unquote secret sauce. I got a lot more for that, where that came from. I have a lot more tips on how to read volume, what each of these candlesticks mean, how to identify different types of trend days, and so much more. If you guys want more of that, if you guys want more live trading recaps, if you guys want more education, make sure you hit that subscribe button. I teach for free on YouTube. I have hundreds of videos, and I love seeing you guys work. So tap in, comment what you want to learn next or what you want to see in the video below, and let's get to the money together. By that, go to our 5-minute chart. We'll notice here that when you identify the overall trend, that's our first step, you then want to look at what's happening pre-market. Are we gapping up? Are we gapping down? And what is that sentiment in comparison to what we've been seeing in the overall market? Today we gapped down. We gapped below those levels. So to me, I look at that, and that is an immediate support turn resistance. We're going to look for puts on pops. So that's step 2. We identify where that puts on pops spot is going to be. We follow the trend. I'm not trying to be a hero. I'm trying to find tops and bottoms. So to me, in my experience, that's a puts on pops play. Our support and resistance, and now it's our job to find where that reject is going to be. So for me, I look for my risk reward. That's the third step, is we're not looking for areas where we can just make money. I don't want you looking for trades that you can make money. And I know a lot of you guys are going to be like, well, J-Done, that doesn't make any sense. Well, actually, it really does. I want you guys looking for spots where your risk is managed. Start thinking in a risk management perspective. We protect the downside, the upside will come. So for me, I see this. I'm telling T-Bull live on voice, live in text, that I think that if we go between 426 to 426.5, preferably up to 426.7, that we have solid risk management, because we will stop this trade if we break above and hold above 427. We have identified a 30 to 50% risk here for a potential $1, $2, $3 move down. And that is how I want you guys thinking about your trading. That is the perspective that I want you guys adapting to your trading. I want you looking at things from a risk management perspective. Okay, we can read this price action. We can read these levels. We can dial in our exact strategies, but without risk management, guys, we are nothing. We will not be able to move forward in our trading. Keep our money without risk management. When I am reading price action, I'm first and foremost looking for my levels. Second, I'm looking for the trend. And then third, I'm going to look for where I can define risk, where my risk reward plays out and gives me an upper hand in the long term. I could have lost this trade 2-3 times, and on that third or fourth time winning it, my R multiple would have crushed all those losses. That's the key, is you're going to have losses in trading. Number 4, our job is to be the best loser. I need you guys to be the best loser possible. Now, I'm not saying try to keep losing. That's not what I'm saying. What I'm saying is that I want you guys becoming so good at losing, so good at managing your risk, and so good at keeping those losers small that when you win, your winners outweigh those losers and you keep more money. Losing is always going to be a part of the game, right? Obviously, we trade live at T-Bull. We have lots of education. This YouTube is full of education, but you're still going to take losses. I'm going to take losses, and that is okay. It's part of the game. Loss is part of the game. Think of it as your market tuition. So for me, I look at my levels, I look at the trend, I define my risk, and I look for setups on the 5-minute and the 2-minute chart after finding my my bigger time frame levels, and I execute on those smaller time frames. That, my friends, is my quote-unquote secret sauce. I got a lot more for that, where that came from. I have a lot more tips on how to read volume, what each of these candlesticks mean, how to identify different types of trend days, and so much more. So if you guys want more of that, if you guys want more live trading recaps, if you guys want more education, make sure you hit that subscribe button. I teach for free on YouTube. I have hundreds of videos, and I love seeing you guys work. So tap in, comment what you want to learn next or what you want to see in the video below, and let's get to the money together.
Now, I discovered something about the US markets that has become very predictable, and I'm starting to focus my whole strategy around it. Now, I used to be like Larry. Larry is a consistently unprofitable trader, and the biggest reason why is he isn't looking out for a specific pattern, important times to trade, or indicators that will give him an idea of what the market might do. He doesn't wait for the market to fit his strategy, he tries to fit what the market is doing. Now, Winnie is a trader that knows what it takes to be consistently profitable. He knows pretty much every day, and around 30 minutes after the US market opened, it will make a directional decision that he could potentially profit from. He has specific patterns and movement he looks for to confirm a trade entry, and when the market doesn't fit that, he just moves on to the next day and waits for his setup to show up. As aspiring traders, we all want to try and be as close to his Winnie as possible. Now, the important thing to remember that just because you know that at around 30 minutes after the US market opens that it could reverse and have a big move, that doesn't mean that that's necessarily going to happen. This is something Larry would do. He would take this information, go to the market, and just bet that the market is going to reverse without waiting for confirmation steps that someone like Winnie waits for. The biggest factor that Winnie waits for is the market to hit a key support or resistance level. This combined with timing gives the market a very strong potential to revert, because the market could just continue with a current trend that it's in. So you want to combine these things together, give us a bigger picture reason of what the market could do. The way I do this is looking at a chart. You can see that the market here has made clear bounces, and so all I do with that information is I say, okay, well, the market's made clear bounces off this level. That's how we can draw a strong support level off of, and then from there you can say, okay, well, when the market comes back down here again, it's likely to reverse off that area again. So what I like to do with this information that Winnie has given us is I'll go to a 1-minute chart and then look for a potential buy. And so what you can see here is, this is just an example in hindsight I want to show you, is that for me the market opens at 6:30, and then right here at 7 o'clock I would say the market right here set up a really nice head and shoulders pattern, and then right at that timing, right at the support level and that timing, the market just took off from there. The next catalyst Winnie says is important is making sure the market has an exhaustive move. Think of the market like a rubber band. If the band gets too stretched, it has to snap back to equilibrium. The market will do this as well. So look out for times when the market stretches too far, because it will cause that snap back, and this can surprisingly line up with the third. 3-minute timing more often than you think. And to show you a great example of that, look at this chart right here. We have the market at about 7 o'clock, 30 minutes after the open, and take that timing with a grain of salt. It doesn't have to be exactly at 30 minutes after the market. It could be 10 minutes before, 10 minutes after. You know, there's some wiggle room at play, right? Nothing in the market happens exactly right or exactly the same every time. This is definitely a rough idea, but if you take into account, we have that timing of about 7 o'clock, and then we have a resistance level you can see up here. Again, that's drawn from a 15-minute chart right there, just to give you a quick idea of what that looks like. You can see the market just bounced up here multiple times, come up again. Totally plausible that the market will go off, sell off from that another time. And then the third thing is that rubber band effect. You can see the market rocketed up here pretty quickly, and it's kind of had...
¿Qué estás haciendo aquí? ¿Qué estás haciendo aquí? ¿Qué estás haciendo? ¿Qué estás haciendo aquí con ese pendejo? Ahí. ¿Qué estás platicando? No tienes nada que platicar con él, tú eres mi esposa. ¿Cómo le estás diciendo? ¿Cómo te llamas? ¿Cómo te llamas? ¿Cómo te llamas? Déjame. ¿Cómo te llamas? ¿Cómo te llamas? ¿Cómo te llamas? Dime tu nombre. Cállate. Cállate. ¿Cómo te llamas? ¿Cómo te llamas? Dime cómo te llamas. Te voy a romper el hocico. ¿Cómo te llamas? ¿Cómo te llamas? ¿Te hablas con ella? No llegues a la casa, ¿ok? No llegues a la casa. No llegues a la casa. Andas con ese pendejo. Andas con ese pendejo. Es una estúpida, una pendeja. Eres una estúpida, una pendeja, una... ¿Sabes lo que van a decir tus hijos? ¿Tú crees que yo soy pendejo o qué? ¿Tú crees que no vas a ver la cara de pendejo? ¿Eh? ¿Cómo que cálmate? Si me estás poniendo los cuernos. Eres una puta. Eso es lo que eres. Cállate tú, pendejo. ¿Cómo te llamas? ¿Cómo te llamas? A mí me vale verga. ¿Tú crees que nací ayer? ¿Estás estúpido? ¿Estás estúpido o qué? ¿Andas cogiendo con él? ¿Desde cuándo? Dime la verdad, ¿desde cuándo estás cogiendo con él? Dime la verdad. Dime la verdad. Dime la verdad, me vale verga. Un llame con ese. A mí me vale verga, ¿tú estás pendejo o qué? No llegues, vas a llegar a la casa, me agarras tus cosas, te vas a la verga con él. ¿Ok? Porque te vas a ir a la verga. Pinche vergüenza. ¿Qué estás haciendo aquí? ¿Qué estás haciendo aquí? ¿Qué estás haciendo? ¿Qué estás haciendo aquí con ese pendejo? Ahí. ¿Qué estás platicando? No tienes nada que platicar con él, tú eres mi esposa. Al contrario,
I made $8,000 in 2 minutes of trading today. I got in that market open, and we got puts. If you guys want to learn, go to stockmarketwolf.com and sign up for a program. Now, this move by 15 minutes was up 100% return.
3,000 contracts? Come on.
I made $8,000 in 2 minutes of trading today. I got in that market open and we got puts. If you guys want to learn, go to stockmarketwolf.com and sign up for a program.
That map is so I could do way better than that. Come on.
That move here as well, and so it's definitely extended from where it has been, and so we can expect the market to kind of at least snap back. And sometimes, you know, this rubber band effect right here is pretty small, and so it might only go here, but if this rubber band right here snaps back as well, you could be catching a very big move. And so that's exactly what happens here, is you can see the rubber band snaps back into place, and you can see it pretty much just gives that all that back up. And then you can see as well, because it did it, this was essentially a rubber band effect as well. It did the exact same thing. And then the market kind of sitting around not sure what to do. And so that is another thing you can add on to make this that much more effective. Now, one thing that Larry often does is when he tries to execute this strategy, he will see things start to line up and get really excited. He knows there's a potential for a massive reversal to happen, and so he jumps into the trade not wanting to miss out on a potential reversal happening. But the market will just keep trending and causing a loss. What Winnie has realized is you need to wait for confirmation that that current trend is over, because you don't want to fight a trend that is already in place. So you need to wait for that current trend to be broken. A super easy way to do this is looking at just a simple trend line. You can see the market had a clear uptrend into this resistance level up here, and then as soon as that trend breaks that trend line and gives a good sell signal, that's when I jump into a trade. And then there, I wait for that rubber band effect to snap the market back into my favor and give a really good profitable trade. So let's walk through a full trade example of what this looks like to a trade. And then there, I wait for that it's up here, and then as soon as that trend breaks that trend line and gives a good sell signal, that's when I jump into a trade. And then there, I wait for that rubber band effect to snap the market back into my favor and give a really good profitable trade. So let's walk through a full trade example of what this looks like and what I look for as the final confirmation to actually execute a trade. So you know kind of A to Z of how to find this trade. So this is an example from a trade I recently took where the market, if we just go through that checklist, we have a resistance level up here that I drew from a 15-minute chart, and then looking at a 1-minute chart, I analyzed the trend. And so what we can see here is the market opened up right here at 630, kind of went higher, and then had a rubber band effect. You can see by these 3 candlesticks right here, it had a massive move up. And then we can also draw that trend line right here just to kind of see and make sure when that uptrend is broken, because the market can totally come up here, kind of consolidate, have a little bit of a pullback, and keep that uptrend going. You never know if this is just really strong momentum and it's going to keep holding, or if it's going to be that rubber band effect. You can totally have trends where it's just super strong and it has strong moves and it keeps going. And so that's where making sure the trend's broken will keep you out of those types of losses and traps that the market tries to throw at you. And then the last thing I like to wait for is what I like to call a pullback or some kind of retest, where the market comes down here, pulls back, makes an attempt to keep going higher, because I want to kind of see this, you know, again, this could just be an uptrend, it could be a pullback and uptrend. I want to see this pullback here attempt to go higher and then actually fail and start to go lower. And so that's what's happening right here, right now. As you can see, the market is attempting to go higher. And a lot of times I like to wait for more of a larger pullback for it to to come maybe up here, but with these rubber band effects, sometimes they can happen pretty quickly. And so with this trade, I got in pretty quickly. And so what I like to look for though is I always want a large candlestick as confirmation. And so if I slow it down a little bit, this is that confirmation. You can see the market comes down, makes a quick pullback, and then makes a really strong red candlestick that's really rejecting that price. That is enough confirmation for me. And then I just bet that the market's going to have some kind of rubber band effect here and go lower. And so, from there I manage the trade, let it play out, and take my profits, move on to the next day. Now let me walk you through a couple mistakes that can potentially happen with this so you can try and avoid having losses when it comes to trading. And so here's another really clean setup where we have our uptrend. You can see the market's broken it. There's a resistance level and I jumped into a trade. There's actually a pretty good move up here as well, which has caused kind of a potential rubber band for the market to give that back up. And then of course looking at the timing, again 7 o'clock-ish is our timing. We're about 7:10, totally good there. Everything is setting up properly. And so one thing that I do with my trading is I'll jump into a trade once everything aligns up, and I'll be nervous about the trade failing. A big thing for me is the fear of it not working out. And so I'll want to reduce my risk to either break even or get out of the trade as soon as possible. The problem with this is sometimes the market can take a while to get going. In this example right here, I've moved my stop loss down as the market moves down here because this looks like it's starting to move down and in a nice downtrend here, and so it's like, okay, I'll just move my stop loss here, take a little bit of risk off the table, and then as it starts going to my favor, it has a big candle here as well. My thought is once you're in trading, you get very emotional and it's hard to control that. And so I'm thinking, okay, here's another little pullback in this little downtrend. We have this little downtrend line that we have here. And so the thought is, if it breaks this, well, I think it's going to come all the way up here where my original stop loss was. And this is what happens when you kind of over manage a trade. You don't know what the market's going to do, right? You want to let that big picture idea play out when it comes to the market. And the big picture idea is we have a timing and all these things line up for at around this time, the market might have a large move to the downside. And so you see there, my trade got knocked out because the market had a little bit of a pullback here. And in reality, this still looks good to go down. The market, it's just kind of chopping here. It's clearly lost this upward steam and movement, and it's going into a sideways trend, slightly down, you could actually say. And really, I think that's good in terms of looking at, okay, well, we're losing strength and momentum, and so it's likely that the market might just continue that downtrend, and eventually it'll start to really lose all that strength of that uptrend will go out. Because what's happening here is there's kind of a supply and demand of buyers and sellers, people wanting to get in on this trend, but then also people like me betting that it's going to go down. So that's why the market kind of goes sideways here. But once those buyers dry up, because once you see the market doing this, you're not going to want to get in long anymore. You can see it starts to collapse like here it does here. And so that's a big mistake that I think is important to try and avoid, because you can see the market then really move down, and that would have been a really nice swing to capture, and it's done that kind of rubber band effect that we were talking about as well. So there are two crucial concepts that will keep you away from being like a loser Larry and making mistakes like I did here. And in this video right here, I'm going to show you more real trades, walkthroughs, and teach you what those two key concepts are.
Tonight on Frontline, episode 1 of a special 4-hour investigation.
You created the mess we're in, and now you're saying, sorry, trust us.
As much as $50 billion
Inside the financial crisis.
Wall Street got bailed out, and Main Street didn't.
How did we get here?
Other banks are taking these ideas and applying them in ways that they've never.
Now, I've discovered something in here is there's kind of a supply and demand of buyers and sellers, people wanting to get in on this trend. but then also people like me betting that it's going to go down. So that's why the market kind of goes sideways here. But once those buyers dry up, because, you know, once you see the market doing this, you're not going to want to get in long anymore. You can see it starts to collapse like here it does here. And so that's a big mistake that I think is important to try and avoid, because you can see the market then really move down, and that would have been a really nice swing to capture, and it's done that kind of rubber band effect that we were talking about as well. So there are two crucial concepts that will keep you away from being like a loser Larry and making mistakes like I did here. And in this video right here, I'm going to show you more real trades, walkthroughs, and teach you what those two key concepts are. Two key concepts. There are two crucial concepts that you have to master if you want to effectively scalp the market. Timing can be the difference from a winning or losing trade. Even if you pick the right direction in the market, if you get in at the wrong time, it can be the difference from a winning trade or a losing trade. And being able to read into the candlesticks and know exactly when to get in can allow you to catch a really big move if done correctly. And then as well, timing to get out of a trade at the right time. Learning how to manage and exit a trade can be the difference from making a little bit of money or a lot of money. One strategy I like to use for timing is using short-term trend lines. The market has a lot of micro trends that it has, and if you can see when those micro trends are broken, a lot of times they can have a snowballing effect. And so right here, I get in on a short, betting that the market is going to go down, and my timing reason here was because of this short-term trend line that I have drawn was broken. You can see the market made a really nice bearish bar breaking below that, and I got in based on that break. And so because of that, my overall thought process and read of the market is that we're in a pretty big downwards trend. We've had a little bit of a bounce off of this support zone that I have drawn here, but I think that the overall trend is going to keep pushing the market down. And so using this shorter term trend line, waiting for the timing to work out in my favor of seeing this break, that's how I get in on, in a way, betting against this uptrend that we have. A lot of times that can be a scary spot to get in, but using the break of that trend line works out really well a lot of the time. And you can see my timing was not very good, to be honest. I got in over here and the market kind of just putted around for about 20 minutes and almost actually knocked me out. But because of how I put my stop above that swing high that it had there, and so it was held by a potential good resistance level, and you can see the market, you know, attempted to break that, and now it's really starting to sell off. And so that's where having that overall big picture comes into play. You don't want to just be blindly getting in random spots, because of course you want a reason you're getting in the market. Even if you have these little micro timing things show up, you want a bigger picture reason. That's the key when it comes to trading, is kind of stack things on top of each other, having those bigger picture ideas. And you can see here I moved my stop to break even once this kind of started moving in my favor, because of course you don't want to let it come back and get you. Timing is all about getting out when the market looks like it's done going in your favor as well. That's what is important when it comes to managing a trade. This trade is going really well in our favor. It's made a nice big move down here. That overall big trend is picking up again, and that was my bigger picture idea with it. And so because I'm up so much here, I've elected to go with a lot tighter of a trailing stop. A lot of the time I like to be moved down with the swings, but when the market moves down so quickly like this, I want to really get out when it breaks this downtrend here. You can see I drew that on the chart there, and so once the market kind of breaks that, I want to get out, because the short-term trend is done. Again, it's all about timing. We got to get timing to get in and timing to get out. You want to keep your profits when you make them. This market could easily snap back here. We're at a support zone. The market could find support here, even if it's broken out slightly. It could make a failed breakout in reverse. And so that's why you want to tighten up your stop really tight. And you can see here the market kind of just eventually knocks me out there, and was a great profit. And you can see zooming forward a little bit, that was really good timing to get out of that trade, because we essentially got in up here at the top of that swing and got out here at the lows. So when it comes to scalping, another massive crucial thing is that big picture idea of having either larger trend lines or bigger support levels that you expect the market to bounce off of. And so for me, I like to use support levels off of a 15-minute chart, because right now we're looking at a 1-minute chart, but this blue line down here is drawn off of a 15-minute chart. And so what that tells me is there is a bigger picture support level that is likely to have the market bounce off of it. And so because of that, I can wait for the market to get to that level and look for timing to get into the market. And so to get that timing really, really well, I initially like to see a bounce, and then I want to look at how the candlesticks are forming. So you can see this candlestick right now, it is working lower, and I like to see that as, okay, the market's making one more attempt to go lower. What happens if it reverses that? Well, I want to get in because it's made a fake lower. And so you can see here, the market then immediately reverses that, and that is the kind of timing I like to get in on. It's a quick fake lower, and then strong buyers come into play. That's when you want to get in on your trade to bet this is going to go up. That's the kind of timing you want to look for. You want to be reading into the candlesticks and how they are forming. The market had a pretty strong sell-off into the lows here. You can see with these two really big red candles, but then immediately after, it had two big green candles, and then it consolidated for a couple candles, made that attempt to go lower, and then a massive reversal of that. And so I think that is a really strong signal that it's going to keep going up, and then from there you just gotta let the trade play out. I put my stop right below this little pullback we had because my thought was this market is really volatile. If it's going to keep going lower, I'm going to get out and reduce my risk right away, and if it goes up and I timed right, then I'm going to be right in a big way. You want to have an idea of the trade and let it play out. Do not try and go back and forth. Seeing what the market does, especially when it moves quickly, can be scary. And so when it's choppy like this, that can be a good reason for you to think, oh, I'll just go to break even because it's not showing enough strength and it's going to sell off here. And in reality, you gotta let things play out, and hopefully they will play out in your favor and the market will kind of shoot up. And so once it made kind of another pullback here, I moved my stop to break even and technically below this little pullback. And so that was really nice little setup for that right there. And then from there, you can see the market starts to really rocket in my favor. And so because of that, I want to ratchet up my stop, take in those profits. And of course, as a target, we're getting towards this high up here. And so if the idea is the market's gonna kind of reverse this sell-off it had, well, we're getting close up there. And so in terms of timing of getting out of the trade, it's likely that we start to find some resistance up here. And so I start to move my stop up pretty tight. We have a little bit of a pullback here at this red bar. I move my stop up there because, hey, you know what? The market has a couple possibilities here. It could do a little pullback and then keep going higher. That would be awesome. Or it could just, crater back lower, and that's okay. It would suck because, who doesn't want more money? But this is a good reason to trail up your stop and get out if it does go against you. But it also gives you, it's a little bit of a support level, super micro, that the market might hold. And so the market essentially just chops around here for a little while, makes another little bit of a break higher, I move my stop one more time, and then it knocks me out. And so you can see now here, that was a good spot to get out. It consolidated, it essentially just chops around here for a little while, makes another little bit of a break higher, I move my stop one more time, and then it knocks me out. And so you can see now here, that was a good spot to get out. It consolidated, made one little push higher, and now it's looking pretty bearish. And so that's how I like to do timing in terms of getting out of trades. I like to get out anytime I'm getting close to a resistance level for long, and of course on the other side, getting out at support levels. Now of course, timing the market can be really, really hard. A lot of the times I mess up doing this myself. And you can see here is a great example of, we have a nice uptrend. The market's made a kind of a pullback here into that uptrend, and my thought is, hey, there's room to keep going higher, and my guess is that we're gonna punch higher. And you know what, the market just sometimes wants to have a larger pullback before it does that. And so the market ends up knocking me out here. But the best thing you can do is, if you lose and you still have a strong idea of what the market's going to do, is stick with what your read of the market is and go with it. You can see the market here had a pullback from where I initially jumped in, but it made a really nice consolidation that I ended up jumping in on. The market kind of sat around here for a while. It made a really nice bottoming pattern, It showed a lot of strength, kind of hard to see now, but there's two really big bear bars right here of it looking like it would go lower. And so because it didn't go lower there, I thought it was a really good idea that, hey, it kind of faked lower. It's not going to go lower because it hasn't. And so my timing to get in on this, just to quickly zoom back on the trade, was this little double bottom and then a little micro higher low here. And so the market made a nice little bullish reversal bar here, and then I just jumped in with my stop right below there, and then bet the market was going to go higher. And you can see right away it worked pretty quickly. I moved my stop to break even once it kind of got up to here, because maybe the market just comes up here and pukes lower, and I'll just get out at that point. And then from there, market breaks in my favor pretty nicely. Just like always, I like to try and see if there's a really tight upwards trend line that I can manage to trade off of, because of course, timing on the other side, we want to get out when the easy good move is going to go against us. And so I like to either use a previous candlestick trailing stop loss, or of course a break of the trend line. And you can see there it pretty much breaks the previous candle and that trend line. So this is mainly how I enter and exit. If you want a bigger picture overview of this strategy, check out this video right here. It goes into every detail and walks you through how to use an actual small account with it. I done messed up. I guess it's going to be a square camera today.
MCI still flushed in, and Apple, you're getting more things bouncing now, but I do think, again, tech and chips are weighing heavily. You have a whole other portion of the market making some right around here. Again, Apple is really jumping. Again, Apple has earnings next week. That's the crazy part. People off the bottom, they're down 2.7. And Tesla's holding up to 50 grand. So that's how long do you sell on until Wednesday? Then next Wednesday, you'll know if the sell-off is going to keep going or if it's going to go. I thought by now, but at the same time, that bond volatility, how it's working, that is the problem child. I think, again, I was very bullish in October, and I still kind of am, but it's like a big thing here, so like 2 weeks ago, we're looking fucking great. You know what I'm saying? But at the end of the day, I'm not really, I've been bearish all year. I mean, you can go ask anybody on it. I didn't trade it as good as I could have. Actually, as worse as possible. But to the same degree, it's more along the lines of I'm down with anything. I think the market has an opportunity to still rally here, but also very well that bonds really hit the dollar. And if I was bearish at the end of last year, I think now seeing stuff reverse, I mean, I think the same way. So unfortunately, it's just I'm trying to play the game with it. Now, that right. On the board, like a lot of the time. One thing about seasonality here, like I was saying, Powell is that's really good, and I think that's all we watch. So, like today, my we'll have a couple of weeks left. We've already talked a lot of how the market has very good one year. Early, and hey, it's hard to do that, or maybe we are going to make it very aggressive. And then the voting side, comes out to the market. man, I was a fire. Honestly, if you were here early, even my sprinkler, it showed that I got that out there more early. But like, if you were here early on,
Da 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 da.
I got a little, so that was thinking, Apple and a lot of these little dumps that last couple of minutes, Google started to wake up. Back to 4166, so literally right at the level we bounced. If we come back down and flush it, we're going to 4137. We can hold it, we may make another test at 4179. And a price target up there. And a sleep with price target up there. 45. Wild part. You guys don't remember? You guys don't remember though? We had a Fed meeting a month ago or so. Everybody was waiting on the audit. So I look at this last couple of weeks here. You know, this year was like 50, then it dropped down to 60, didn't know. And now we're guaranteed no rate hike. So that's really good news. That's really good data. U.S. natural gas storage number 74 billion. That's 79. WDC tried to move off the bottom there. Again, Google got a little bit of lift. It's still pretty whack, but I can't do that. Now I have to find all of that. Yeah, there's fun. I don't know. I mean, Meta, at least Meta brought up some of the things that after not as wild as yesterday, though. I can definitely say that. See how it's playing out. We got several hours.
Yeah.
go back to flying coach, you guys ain't. Calm down. All I know is y'all keep talking shit about securing airplanes. It works. Like, y'all made it so cheap, though. That's what I've learned. Because I took a Spirit flight. I took a Spirit flight. It wasn't that bad. I was just like, it's perception. Definitely the perception. And that's all it is. That's it, but I'm like, $40. Right back to the well, the bonds are trying to climb up, but that's just, I don't know if it's going to be off again. First comment, one was to see that. Again, it's got like down right at the moment. It has to go still the high. Bitcoin not really reacting to that headline. ECAT on the low. Why the big Baba China names are going up, bonds are catching in here into the high. Better than nothing now. Baba against Alpha Rampage, WBC another low. I thought that was going to go out there again. Iosa under and backed out of it. If they do, it'll have to be. No, I don't know. I don't order. I I didn't agree with it. I think you can take like away. Have a little coverage. S2 on the high, so Nasdaq's still dying. Nasdaq down 1.28, literally S&P 27 down quarter, and Russell up. RTX is still climbing. I'm still in that one. So we're up. Never heard that term before. I mean, short first there, but I think got flat, got stopped. Out loud, it got flat. Yeah, like very, I was wanting more on this one. Again, they got like $600 million license. They wanted to cap like $12 billion. Alright, WBC, that's another low. Sorry, WBC, that's $1 up there. It didn't go any lower, just slightly lower. It will go down. I don't watch the game. I watch my like that's all. That's my but that I like to see hard. What we got is still good. It's very good. And it's still like nice here. I never really respected it, but you know, I definitely I respect the notion. I just thought I don't know. I feel like I just way too much. Not like really don't have that attitude, like so good. Long time. I'm over it, hitting the little go. And then one week was possible. Alright, SPY's coming up again, but I at this point, I feel like nobody gets their hopes up anymore. I mean, that was the moral of the story with the on. Don't get your hopes up, so let's see if we can get above here or not, but there's still time to do it again. At the bottom here. WBC is still flushing. Dollar came off the high, but still very, very elevated. And above 30. Yo, Ambarella dying. Weird because NXPI was the one ripping right here. I don't know. This is crazy. Dropping NXPI and EC. So again, it's fine. This is related to EW. That's what I'm saying. I don't think EW first is all that bad, but they all got flat. Thermal ended up down today, but they literally got flat the day before. saw him. Watching over and over again. Alright, still working our way up again. If we can set above this high right here, that'll be better. Then we're gonna have to focus on here. Get past 4178. We'll fill the gap, and then we're gonna get 1.5 here without getting the dollar school. I think anything below $30 would help by getting some of the bonds at 29.1 for early. Find a place we're running earlier. I think they're all up there. But if they're trying to get those down to the one thing like Mark said, but from the day before they were happening. Thermo Fisher on the high, and on the low, and then same thing on the low. Fly back at VWAP. Might get past that high. Bonds are a little bit more cushy, but still not safe. I can see it now. I can't like say it. Not the household thing, but like. I don't know. Hopefully we sold after hours, but then it's coming. It's not like it's that bad right now, but after the down yesterday, today, and I can't believe that's how it is. This was a 9% down yesterday. Last Alright, you're working your way up. Your first little baby high. Got above the rejection now. So again, 41.55. That level was solid for now. Hopefully you don't have to retest it if you do it in stage. Now 41.77 and gap still at 41.86. Again, it's still a bond option lurking right around the corner, so I don't know if you yet. And it's still moving up. IRBS, I think there's gassing now. Coca-Cola, 52 low on MO now. They have to jump 1.5. Now it's actually up Coca-Cola. That's what's moving up. Again, SPY now. I think Google and Meta can really help you out a lot. Microsoft. Right back to the they were up a lot more. Remember their active stuff yesterday. high on the day. SPS has gone up to the first level that they're supposed to block. But right now you're at home. Like 411. So I level 411. Exactly. Everything is Raul. The Raul setup is still picking up for you. And I was on get around it, like just like the other day, just like Bill Ackman. My brother telling you guys, hey, Bill Ackman, I was like, hold on, don't fall for it yet. Once you get past here, you take this thing and make money. There's no idea here. There's no one here. We're not taking it like that. Yeah, Dollar General closed yesterday. Dollar's down. Tom on the high. $1.30 now. One more minute. $1.30 will be the ESPN the upcoming conference. One for night. Came back a little bit. Why still red? Nasdaq still don't have a good night. Long term, I don't know, bro. I can only watch one of my long term. No. Right off the level, little pencil, blocks it up.
Goddamn. What's up with Spine?
Okay, now way more activity on the high ticker. A couple more banks. Watch many of the other. Again, I think it's equal to Friday can come up. Otherwise, those come down. Next we have to take but we're not over it. Again, it's over the gap. We'll talk about it. Back to the level. We got that first. Now you're back up here. Over the gap. Talk about. I think off the water, yeah. It started running this morning.
Edward J. Aldez, Chairman, President, and Chief Executive Officer of the company, and Stephen Hamner, Executive Vice President and Chief Financial Officer. Our press release was distributed this morning and furnished on 8K with the Securities and Exchange Commission. If you did not receive a copy, it is available on our website at medicalpropertytrust.com in the Investor Relations section. Additionally, we're hosting a live webcast of today's call, which you can access in that same section. During the course of this call, we will make projections and certain other statements that may be considered forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are subject to known and unknown risks, uncertainties, and other factors that may cause our financial results and future events to differ materially from those expressed in or underlying such forward-looking statements. We refer you to the company's report filed with the Securities and Exchange Commission for discussion of the factors that can cause the company's actual results or future events to differ materially from those expressed in this call. The information being provided today as of this date only, except as required by the federal securities laws, the company does not undertake a duty to update any such information. In addition, during the course of the conference call, we will describe certain non-GAAP financial measures, which should be considered in addition to and not in lieu of comparable GAAP financial measures. Please note that in our press release, Medical Property Trust has reconciled all
300 projects.
to the most directly comparable GAAP measures in accordance with regulatory requirements. You can also refer to our website, medicalpropertytrust.com, for the most directly comparable financial measures and related reconciliations. I will now turn the call over to our Chief Executive Officer, Ed Alcat. Thank you, Charles, and thanks to all of you for joining us this morning on our third quarter 2023 earnings call. Steve and I are pleased to be joined for today's discussion by two of our esteemed colleagues, Rosa Hoover and Kevin Hanna. Rosa's been with NBC for 14 years, beginning as director in our asset management park and underwriting group. In 2016, Rosa took over full responsibility for that group of some 30 people. Rosa started her career in public accounting and, among other roles, served as chief financial officer of the Birmingham-based hospital. As our current senior vice president of operations, Rosa is the perfect person to provide a detailed look at the strength and diverse nature of our portfolio and the reasons underpinning NBC's confidence in future cash rent. Kevin joined NBC in 2008. He started his career at Ernst & Young and has nearly 30 years of public accounting experience. Before NBC, Kevin served as controller for Fruit of the Loom, a Berkshire Hathaway subsidiary. Kevin currently serves as our senior vice president, controller, and chief accounting officer. And we thought this
Not a little bit. I mean, we're still in the zone here, so watch out though, guys. This could be a problem. Just like yesterday, students are like half-ass rally, flushed it out, break every level afterwards. I swear to down. I gotta watch it.
Take care of it and go over now.
Over. Well, that's the thing. I mean, there's way most of the world right now, but that's what we have to do. You guys don't know, like, conference call is like actual conference call. So, it's a little more than the order. You'll have to do more in here than a call.
Notably, our new dividend has been set to a comfortable level to absorb the dilutive effect of additional near-term asset sales, which will obviously also be offset by some interest savings. Importantly, since announcing this update strategy, we've already made significant progress. With a series of open market
That's good
transactions,
news. Again, they're talking about selling stuff. It's not selling.
$50 million
We've done it a long time ago.
in December of next year. And a few weeks ago, we closed on the sale of our four remaining Australian facilities for approximately $305 million, or a 5.7% cap rate. We are actively contemplating additional sales as sophisticated real estate, healthcare, and infrastructure investors continue to express appetite for our assets. On several occasions,
Your guys' comment.
that has already manifested in unsolicited offers for various assets. We recently engaged a potential advisor to help evaluate these offers and explore the sale of various assets around the world. We will only
Yeah, I think that's the biggest driver of why we're up
we
here.
can realize attractive price
Talking about selling assets
underwritten
and already lowered the
I'll now turn it to Rosa to update you on the performance of our portfolio during the past quarter.
Then, thank you for participating in today's discussion. For those of you that I haven't met, I've spent essentially my entire career in healthcare and have been with Institute for over 14 years. Today I have overall responsibility for our business operations, including asset management and underwriting. In this capacity, I maintain regular contact with our
By going down a little more,
I'm encouraged by what I've repeated with personal operations.
Microsoft on the low,
And
Google held up a little bit.
Trend 2023. As you will see in our supplemental information filed this morning, our tenant's operational performance, which as a reminder is reported 1 quarter in arrears, remains strong, with trailing 12 months total portfolio EBITDA recovery of 2.1
Literally dropped 18 points from that high.
Through some highlights
And now we're
from
back.
the portfolio.
Yeah, look at that level.
Beginning with our UK operations and Circle Health. In late August, Centene signed a definitive agreement to sell Circle operations to Pure Health for $1.2 billion. The transaction is expected to close in the first quarter of 2024, and no changes are expected to Circle's operations or leadership from this sale. As private insurance coverage continues to expand in the UK, it's clear that investors are increasingly attracted to opportunities involving
Indicators are lower, riding on the high.
which is, of course, great news for the value of our real estate. This is also reflected in the recent
Apple new lows too, Apple and Microsoft.
of MPG's portfolio of Circle facilities, with revenues up 11% and EBITDA up 12% on a trailing 12-month basis year over year. Shifting to Priory, which has cemented itself as the largest independent mental health care provider in the UK by number of beds, MPT leases 37 behavioral health facilities to Priory. These properties have maintained EBITDA coverage of approximately 2 times since acquisition. Given behavioral health trends across the globe, post-pandemic occupancy rate,
4 points.
and recent improvements that Priory has made in staff recruitment and retention practices, we believe they can continue to deliver strong financial performance. Priory is managed by one of MPT's long-term operators, which is based in Germany. Media has been a model tenant for roughly 10 years and is the leading player in the German private.
We'll come back. That's going to be something small. And we were talking everything exploring sales. And that's what so that like that. I is split. Apple, Microsoft, very big drawdown there on this whole little thing. And now we've given up about 13 points. Or 20 points. Just about what? 90 wild. watching Google and Meta. These guys go low and got a problem. RTX, LMC, those are and then Microsoft now too. That one's good. Again, I really think Google and Meta start going. Those start to take off the most. They keep going down. That just starts to put way on. Well, yeah, I'm looking down. RTX, non-stop. Netflix again on the low, Nvidia. Slide about to do it here. You're getting the most. I mean, there's a couple of things on the high ticker. EDR, that was the takeover stuff from earlier. That's popping again up 43%. But slide back to 41.55. You just hit the low of 41.54 not too long ago. This is your fourth time testing this level today, Chad. So literally down every single time. So again, it was
Summer lows that were just broken right here at 140. Now you're starting to head to the downside. So yeah, I'm not super confident about this whole chip sector right now. I mean, if Nvidia ever loses 400, and their report's not till next month, but if they lose 400, then that's going to be also, you know, a pretty disastrous moment here for the Nasdaq. I would think so. Let's wait to see what happens. All these names are just bouncing around pretty good. As Randy's a building back up.
Love Ransom.
BP buying some Tesla hardware.
100 million order.
That doesn't impress me.
No, you don't care.
100 million order? Yeah, you liking Nvidia there? I mean, so look at this on the daily here, Randy. Let's go to the screen, guys. I think we'll show this daily. This is $400. Bouncing off of it back in August. Bouncing off of it again here in September. Yeah, exactly. So it's a nice little move to the downside. Yeah, it's a 50 period. Nice move right back in. What do we think it's going to bring? Looks like a bounce. Looks like a bounce. I would agree.
Randy says buy.
Oh no, here we go. Oh, still a bit. I thought we were getting the change up there.
You know, it's kind of like a slight moment. Okay, I see how it is.
Okay.
You're trying to throw us off.
That is down 3%, almost 4%.
Yeah, it's the market's bouncing nicely though.
Exxon
For now.
Mobil.
For now.
What is? I haven't even looked at oil yet today. XOM 108. So that's another decent little level. Did you ever step in? I know you were looking at this one there. Yeah, so you're just still, you know, it's kind of just pretty choppy. Nice move up to 121, back in right now with tensions in the Middle East. I mean, it would not be a horrible play to think that oil does have the opportunity to get back up to the upside. There's your 120. Here's a nice bottom at 100. I think, Randy, it might be a better play to wait a couple more dollars until you get into some more support. But for right now, XOM looking pretty good. And the name that I like, I'm actually in XOM and not in CVX, but I like Chevron as well. As these charts will go when they want to. Because look at this. It's a little bit closer to support right now.
That's
150 right here. So they're all within dollars of good buy spots.
Chevron's the one I'm in, and that's the one.
I don't know if I like oil. Like, I mean, it's not that's solid trade. I guess it's there for now. You got global uncertainty, production still. We just got to reload.
I
Look
think
at this
Rob's
got
getting one.
the food cup here. So
Thanks, man. Appreciate it. If Rob isn't getting one, I will. Very quickly, I don't know. I said yes to Rob, but it's fine. It's fair enough. I'm sorry. Just very quickly, until we get back above the trend line on Intel, like it's been resistance and clear trend reversal. 200 period move in front of earnings. That's right around $32 even. So I would expect some support at 32, but until then, you got to look back up. And every time this pop, you look short, you can see the stairs head down. But that's not the only chip name that's going to be a trade. Got to highlight Micron here because, like we were saying with Intel, the trend on Micron is a little bit unbroken for now on a daily. For the entirety of the year, there's been a single trend which is held for Micron, and now you got 65 is the trend, 64 is the 200 period moving average. Maybe a chance that we get down in there today. If it gets back above 67, that's a great relief rally and maybe potential break back out for Micron. So this one is going to be on my radar. And ARM is back underneath $50, although temporarily. Well, that 50 level is back in play on ARM. But we're right here on some strength in the market. I need to see it fail that top at the open and then think about jumping back into this. But Micron on the radar. It's gotten so close to that support line. looking for a bounce off that 65.
Let's touch on XPeng here. Back to the upside of P7. You joined us at 8:30 this morning. A couple of things. This was yesterday. I mean, all of these were wild yesterday, but decent down. Look at that video. Yeah, there's a new robot in town. So move over. Tesla's Optimus. XPeng coming through with their own autonomous robot, I guess. And I mean, we were talking about the driving side of it as well. Why don't they just change their name into China's Tesla? I mean, they took their driving software, their full self-driving software, they adapted it as their own. YouTube it and thank me later. All right, let's talk about what XPeng plans on doing. It wants to roll out its driver assist technology in Europe by the end of the year. It's already done that in some 50 cities in China. It says more than 90% of the users in Beijing with driver assistant features turn it on and use it on a daily basis. You'll know that Tesla's full self-drive is not actually available in China. So they really don't have any competitor there right now.
This sounds terrifying. The CEO saying the Optimus robot is actually from their next generation flying car that will also have humanoid robots in them. So not only will you be flying the car, there'll be a robot driving it for you.
Great.
Why in the heck? That doesn't even make, first of all, that doesn't make any sense, because if you have an autonomous vehicle, why the hell you need a robot in it? It doesn't make any sense. It's just the dumbest thing of all time.
Like a chauffeur.
No, but it's literally,
I can talk to somebody.
if anybody's seen the movie Airplane, it is exactly that. One of the best gags of all time in a movie is in the movie Airplane when the autopilot turns on and then a giant inflatable pilot jumps up into the seat, as if you need someone has to be sitting in the seat with their hands on this thing. It's a gag out of Airplane. I don't know what the heck that means except for it seems stupid. Anyways, XPeng, we kind of talked about this one, so 13 and a half is the support zone. If it gets down there underneath 14, that looks like a bit of a buy zone on technicals. That doesn't make sense. Yeah, look, it would have to, there are some fade levels on this stock. I just feel with its strength, I don't know if we get up there, but there's a decent chance that you could test some of that support, 13.5 to 14 even. This is where I want to talk about Rivian, so I'm gonna get away from that to talk about Rivian. Rivian broke that 17 bottom, and it's still underneath. So even with this move to the upside that the market is seeing, that 17 is very much in play. If you want to be patient, obviously the market's coming in at the open to the upside, but this is where I would like the first idea of a short for Rivian. There's a lot of chop in here from 17, 30, so I will acknowledge that like it could curl anywhere in that 30-cent range, and to me that would still be valid. So either I want to try to catch a pop in a curl before 17.30, 17.35, or just a simple failure at 17 even. But that's the one I'll be watching at 9.30 if I'm going to make a play relatively quickly on one of the EVs. That isn't Tesla. That's it. See, that's what I'm talking about.
There it is right there.
Leslie Nielsen,
Such a class.
he was
So many good movies. Yeah, if you haven't seen Airplane, definitely give that a shout. To Naked Gun, everything. Naked Gun was like Naked Gun 1.5, 2.5. Like this is so stupid.
I chuckled even thinking about Naked Gun.
O.J. Simpson. I mean, there's some great.
Nordberg.
You have to, Nordberg. The police in that are too much. Okay, so here we go. XPeng. I just think you shorted at $16. Wait for this thing to, head to the north side if it's going to get any more gas into it. It's only 169,000 shares. It's not very many at all. The FXI here again, bouncing off $25. This is the ETF for large cap China names. So I feel like this is where the buy is at. You don't have to worry about picking names or anything like that. We've seen this hold $25. This goes back into, again, summer, where you had that bottom. We broke a little bit below it right now, and now we seem to have held up there at 24.80-ish. So we can look at this as a possible buy zone now for FXI. So whether or not you want to buy individual names like the Li Auto, we've talked about that a lot here on the show, down to $34. NIO is bouncing around 8 still. Ooh, 760. Is this a 52-week low for NIO? It must be somewhere near it, right? I don't know if it ever got down to 7 flat or not for NIO. What is it? Oh no, 52-week low is 7 flat on NIO actually. Right there, I just saw it. We must have had a wick. No, that wick is set. Like E-signal is showing 7 as the exact bottom there. So that, honestly, if there's anything about it, this is a great one. down here being this low. But if you want a Chinese name, you pick this. You get Lucid down here as well. A little bit of a different feel on what their car is going to feel like as opposed to a Neo and what they're doing with the swapping battery and everything. And then the Saudi money backed Lucid right now. Look at how low this name's gotten to. Wow, Ford. I wasn't even sure. I was going to say maybe 5. This is like okay. We got to figure out like what the solvent number is here, because insolvent number. Because like, at what point does Lucid just continue? I don't want to say cease operations, but like, I guess they almost have that's Lucid's symbol. Logo.
That cannot be right.
Their market cap is still 10 billion. Short float still 25%. Wow, there's some destruction here right now in a lot of these names, man. These will just continue to be another one down at $4. Maybe we get a bounce of $4. Actually, I'm gonna look at Lucid at $4 today. There we go. We just got another name that we'll have to look at here. $4, eh, guys? Isn't that seem like ridiculously low for Lucid?
When is Lucid mullet? That's my question. $4. Yeah. We're selling $300,000. Exactly. What's
Yeah. Let's talk some airlines here just to wrap things up quickly. Southwest, the latest to come out, not good, domestic, obviously. So, I mean, the daily chart already kind of tells the story here. We're gapping down even further this morning, but not a good outlook specifically.
When you compare this chart or the company's fundamentals to, say, American Airlines, United, Delta, the ones that have transatlantic flights, fundamentally different. That's because there was a surge in demand for overseas travel. Southwest doesn't fly overseas, they're all entirely domestic. Let's talk about how they did. 30% drop in income year over year, Brendel. Despite that, they say they want to grow capacity next year. They're going to grow, but they're going to slow it to a pace less than they projected. They're also citing moderating travel demand and booking patterns are shifting back to pre-pandemic levels, so not a good look.
A trade though today, guys, possibly.
Or, so like, well, I don't know. Does anybody like the? So here's okay. Like this is not necessarily the best. So just looking at Spirit, like it just I was looking at Spirit Airlines because it's at a key level of 20. So you kind of copy that. I'll get the SU, I'll get the LUV in a second. Like you look at all of these, they're pretty nasty, but Spirit's at a pretty good level at that 20. I'll go back to Southwest because that's what we're supposed to be talking about. But anyways, Spirit 20 can hold. It's interesting. If you're at pandemic lows, things are going really bad for you. And on the weekly chart, the only thing left is the absolute pandemic bottom for Southwest. Like that's it. 22.5. That's it. You're 50 cents away from it on the bid. The actual pandemic low.